I'd ask Director Chopra, thank you for hanging in there. And we will go first to the gentleman from Iowa, Mr. Nunn, for 5 minutes.
Well, thank you, Mr. Chairman, and thank you, Director Chopra, for hanging through. It's a marathon today, but it's important for all of us to be able to go through this. I want to follow up on a number of items that were brought up from some local bankers in my community in Iowa. There are many folks in the Midwest who are trying to do the best they can to keep up with what seems like a really ever-changing regulatory environment. And it puts both the economic burden on them, as well as just a challenge to be able to support the customers and communities that I exist in. Some of the words that they have described to me in their dealings with your agency have been that the guidance is unclear, it is not always concise, in fact, sometimes it's conflicting. Some have called it partisan, and others have said that it's analytically weak. So to get us all on the same page here, I would like to just go over what the CFPB has that's unique to your organization that's different from a lot of others. First among here, let's be clear, you are not under the appropriations clause, correct?
The appropriations clause?
Yeah, so you're funded by the Fed, not directly through any
So
appropriations.
the appropriations clause is in the Constitution. That question is
Right, and you're not under
Supreme
it,
Court
correct?
right now.
Yeah. Second, you don't have an independent inspector general, do you?
Our Inspector General is with the Federal Reserve. They do both of them.
Well, they oversee the Federal Reserve, but you don't report to the Inspector General. They oversee the entire aspect of it. Do you have an executive board?
No.
Okay. I find the collection of those three things concerning, and that's an issue for Dodd-Frank that we can take up as we go forward. Now, when you and I last spoke, we came on the heels of roughly 250,000 Americans who had their data hemorrhaged by CFPB. I'm hopeful that when we spoke in June, we were going to get a written after-action report on this. Has your office had the time to review this and provide any kind of written after-action on what happened with that leak?
So again, the misappropriation theft of data by an insider threat was completely serious. We are continuing to cooperate with all law enforcement related to that, including any criminal law enforcement. With respect to changes we have made, we're happy to
I'm asking,
brief you.
Director, if you have provided a report to Congress on exactly what happened.
Well, we've complied with all of the pieces of it. If there's specific questions about what happened.
I want to make sure this doesn't happen again.
I do
So
too.
Here's
and
my ask. Please provide us a written after action on what occurred so we don't have this again. Thank you. I want to turn now to Section 1071. I know it's been part of an ongoing conversation today, and you are statutorily obligated under Dodd-Frank to collect a number of data points. In fact, as I understand it, it is now swollen to 81. In fact, you've exceeded your mandate by about 25 points.
Sorry, just to be clear, that's not accurate.
Okay, please describe to me where I'm
There
incorrect.
are 81 data fields. So I'm just going to give an example, which is not in the rule, but it helps.
I think that we can
but
equivocate over how you
if you-
want to
if
call
you're-
it. There are
if-
81 different items that members who want to review this would have to fill out. Is that correct?
So again, I'm trying to explain that. There are not 81 different items. We create a template for how people can report. So if you have a first name, a middle name, a last name, and a suffix, in order for the data to be cleanly understood, that might count as 5. So again, we
So a total of 81 different fields that need to be filled out. I'm going to follow up on this because, again, you went above and beyond the requirement here by 25 additional requests here. I want to understand how this information is going to be used. Let's be very clear here. Is this information going to be publicly available?
So there's not going to be personally identifiable information. We're going
Will
to
any of the information be publicly available?
if you'll let me finish, we're going to go through a process pursuant, just like exists in mortgage data, to figure out what type
Director.
of summary.
Are you going to provide this information publicly, or is it going to stay internal to the CFPB?
As I just shared, just like the Home Mortgage Disclosure Act data, there will be certain analyses and data that will be made public. That is years away.
I believe it's the intent of the CFPB right now to potentially publicly shame a number of organizations, including my bank in Union State Bank in East Peru, Iowa. It's got 15 employees, population of 200 citizens, and they have a very different profile than what may be in a place like Pittsburgh. But East Peru for them, if they don't meet the standards that you've laid out here in, your diversity and inclusion, there's a real chance here that they could be publicly
No,
shamed.
that's not true. But the data will be used for Community Reinvestment Act. That is already, we're not going to be duplicative data, but I'm out of time, but I'm happy to take that question.
I want to add
Gentleman's
this one.
time has expired.
I yield my time back.
Next, we'll go to the gentlewoman from Texas, Ms. De La Cruz.
Thank you, Mr. Chairman, for holding this hearing today, and thank you, Director Chopra, for appearing before us today. I serve a largely rural community, Latino community in deep South Texas, south of San Antonio, and my constituents rely heavily on smaller banks, community banks, and credit unions. And this is really important for their livelihoods, for the economic development of our communities. It worries me increasingly as I hear from these community banks that your agency remains insulated and unchecked by Congress while creating rules that directly impacts constituents in my area. The rule that really concerns me is the 1071 rule. We've heard it over and over today, how it's going to affect community banks, how it's going to affect small business owners like myself, and ultimately, who's most important are the consumers, the entrepreneurs. And so I hope that today you're hearing the message that the 1071 rule is just simply not working. It's not going to work for community banks. It's not going to work for communities that want to thrive, and it's not going to work for small business owners. This seems to be an expensive endeavor for community banks to implement, not only with training for staff, but implementation of new software. We're talking, for the people listening right now on C-SPAN, we're talking about going from 15 data points to 81 data points. That is an incredible increase. And what it's really doing is profiling customers who've never been profiled before. Not only is it going to take a significant amount of time to profile these customers, asking questions such as sexual orientation, which, remember, banking has been built on being able to look at a project, look at credit scores, look at debt ratios, and to be able to make an analysis away and apart from profiling customers. Now, because of the 1071 rule, they're actually going to have to start implementing and profiling customers. I'm worried about the costs that it's going to take to comply with the 1071 rule. So I want to know, do you recognize that this rule may result in less availability of credit to small businesses that it targets, particularly if it leads to smaller banks having to pull back from lending due to the costs associated to the 1071 rule?
Well, let me just share with you that we saw during PPP that actually the small community institutions you mentioned really punched above their weight class when it comes to serving small businesses. Many of them, they have those relationships. So we were under a court order to complete the final rule by March of this year. The CFPB was sued a few years ago for not doing the rule. We complied with the court order. We increased the loan threshold, which exempted a large number, I don't have the exact number of small banks. But of course, I share with you that we want a robust and really fair small business lending market. This is really the fabric.
I'm going to reclaim my time quickly here. When was the last time you actually spoke to a community bank about this rule?
So I've conducted sessions with, I think, every single banker association represented in this committee and more. I think I've met now with thousands of community bankers, and you're right. Many of them, in fact, do mention this and other issues. I've done branch visits.
Well,
in
and I'm going to
several
reclaim my
places.
time again. I think it's more than just a couple of them or some of them. Every single community bank that I hear from says this is a problem, and this is going to create a lot of problems for not only the banks, but the consumers, small businesses, and for the economic well-being and prosperity of our communities. I yield back.
Gentlewoman yields back. We now go to the gentlewoman from Indiana, Ms. Hochin.
Thank you, Mr. Chairman. Thank you to the ranking member. Thanks, Director Chopra, for your testimony and being here on this long day. Since you were last here a few months ago, the CFPB has continued to put forward what I view as politically motivated rules that go beyond your statutory authority. Despite my colleagues and I making our concerns known to you at the last hearing, I still frequently hear from constituents about the lack of input on rulemaking, the failure to tailor regulations towards smaller institutions, and an almost impossible to navigate landscape that comes from CFPB's continued regulation by press release. It's beyond concerning. We're going to continue to push on these issues. So to my questions, Director Chopra, my colleagues and I have previously made our concerns known to you about the continued pattern of regulation by press release, and when that fails, regulation by enforcement. With one of my colleagues earlier in this hearing, you said that the Bureau has, quote, tried to articulate guidance through the various laws that we've enforced. How is a business supposed to know what guidance exists if they aren't made aware of any wrongdoing until the CFPB alleges misconduct has occurred and forces a business to pay a fine?
Well, I don't think that's the case. I think that we try our best, and based on feedback from many industry groups, including the Consumer Bankers Association, to be able to publish information that answers questions about how to
I'm
comply.
glad you mentioned the Consumer Bankers Association. They recently reached out to me on Dodd-Frank Section 1034C and the advisory opinion that was recently published by the Bureau. They're concerned about that it's difficult to understand, it's vague, and that there is what is the scope of it and what isn't. It's a significant policy. Stakeholders are required to comply with this within 2 months. And I understand that the Consumer Bankers Association recently reached out to request a meeting with CFPB staff, but the CFPB rejected their meeting request. Why would your staff reject a meeting with an important stakeholder like the CBA? And will you ensure this is corrected so that industry stakeholders can engage with you and get a deeper understanding of what is required of the AO?
Well, you actually raised such a good example. Congress passed that part of the statute. That is law.
My
That's
question
the law
is,
of the land.
why
If
would
I
you-
could finish.
the question is,
instead
I'm
of just
reclaiming-
bringing an enforcement action.
You're not answering my question respectfully. Why would your staff refuse a meeting with the CBA, and will you ensure it's corrected so these stakeholders can engage with you to get an understanding
Well,
of what is meant
I'm
by the
happy to
AO?
look into that and make sure that we're
So is it,
having-
will you, yes, ensure that you'll meet with the CBA?
Well, I think our staff meets with associations all the time, but I will check into that for you.
Will you commit that your staff will meet with the CBA?
Sure. I mean, we'll
Great.
have someone meet.
Thank you.
They have meetings with us regularly.
Perfect. And so I want to go back to just this regulating by press release. Under what authority does the CFPB governing by press release? And why is it not clearly declaring rules and going through the appropriate regulatory and administrative processes such as the APA?
Well, we are complying with the APA, and if you want to share more detail about regulation by press release, I don't even actually know what that term means. We put out regulations through the regulatory process. We've received feedback that we should publish important developments, and so yes, we do post information on our website.
Until a rule is made final, then any announcements you have made to the fact are not enforceable.
No, the regulation and the statute is what governs it.
Great.
The press releases are there to say, we're collecting comment, we've published this guidance, we've issued this report.
So you're not making enforcements based on rules that have not been promulgated 100%?
Well, we would not win those in court.
But are you, the question is not, would you win them in court, is are you making enforcement
I don't,
actions?
if you have a specific example of that, I'm happy to discuss it with you, but we are attempting to issue the guidance in response often to industry questions. This is a program that Director Kraninger, my predecessor, started that we've continued. So I'm happy to address real concerns wherever they emerge.
So do you agree with the well-established principle that if an action is establishing a new obligation on covered entities, it must go through the notice and comment rulemaking process in order to be enforceable?
Well, so the statute often creates the obligations. We often issue guidance to say, this is really how we intend to supervise for it. It's for transparency. I'm trying to also react to, you're saying that there's regulation by enforcement. We're doing all these things to help avoid that.
I just want to know if you're, and happy
We are
to talk to
complying
you.
with the administrative procedure.
Happy to
Gentlewoman-
talk to you about this.
Gentlewoman's
further.
time has
Appreciate it.
expired. Gentlewoman's time has expired. We now go to the gentleman from New York, Mr. Lawler.
Thank you, Mr. Chairman. Director, thanks for being here today. And you're here today at a time of significant economic concern. Concern continues over inflation, rising rates, families struggling with expenses. I know some of my colleagues have alluded to significant concerns about the effects of regulations coming out of your agency and the potential cost-benefit analysis. And clearly, we have serious concerns about how you are ensuring the cost of regulations and other CFPB actions do not outweigh any potential benefit, particularly since those costs will likely be passed on to consumers. The Fintech sector has helped to provide credit access, particularly for low and middle income individuals, and many of these providers are also pioneering strong consumer protection. I'm concerned that overly broad regulations threaten to kill innovative, law-abiding fintechs. Registration of non-banks, for instance, or 1071 small business lending rule. What kind of cost-benefit analysis is the CFPB engaging in to make sure that you are not harming vulnerable consumers in the name of protecting consumers?
Well, certainly with respect to rulemaking, we're under certain obligations to publish, it's a regulatory flexibility analysis, including to look at where the costs are. You know, sometimes when it comes to benefits of getting a credit report corrected, avoiding an illegal foreclosure, it can be hard to estimate, but we comply with all of that. And let me just share, I agree with you that we want all sorts of companies, particularly small and new ones, to be able to compete against the big guys. And ideally, rules, including laws that you pass, can be clear and even bright line so that there's not ambiguity about it. And sometimes we strive for that, but often the laws that are passed, new situations come up, and we are trying to figure out how to make sure that those small and nascent players can really compete to the benefit of everyone.
So are there instances where you could see low and middle income consumers being harmed by an overly aggressive CFPB regulatory regime?
Well, certainly. Any sort of, I've seen many instances. I used to be a commissioner at the Federal Trade Commission, and that agency many years ago used to have a history of targeting small businesses who couldn't defend themselves, strong-arming them into settlements. And, you know, that kind of fear, obviously, that could impact those entrepreneurs and those consumers.
So do you see that happening now at the CFPB?
No, actually, one of the
in any
things
way?
we've made sure we've done is we really try to focus, especially on the enforcement side, repeat offenders, large players, those who know they were engaged in the wrongdoing. We also make sure that in our supervision program, we're really tailoring it based on risk and not overburdening. So, you know, again, I take the feedback seriously. We obviously always need to push ourselves to make sure that the system is serving everybody well and there's fierce competition.
Previously, the CFPB's Office of Innovation was focused on encouraging consumer-friendly innovation by creating approved safe harbors, removing barriers to entry, and enhancing competition in the marketplace. In 2019, the CFPB rolled out several policies, including the Compliance Assistance Sandbox Policy and the No Action Letter Policy to facilitate compliance and promote innovation. Just 3 years later, however, the CFPB rescinded these policies entirely. Why did the CFPB reverse its decision to help emerging fintech companies enter the market, especially considering the Bureau's focus on the importance of competition?
So, just so you know, pretty recently, we've made sure that some of those programs are still doing work. We approved an application for those representing small banks on construction loans to do alternatives, and we're going through that process. Some of the programs you mentioned, we did a review of, and they basically did nothing to spur innovation or competition, and we found that the recipients of those letters were in some cases marketing themselves as endorsed or approved. So I think what we're focused on is programs that affect lots of market participants but don't crown, one winner. Government shouldn't be picking winners and losers like that.
My time is expiring. I yield back.
Gentleman yields back. We now recognize the gentleman from Florida, Mr. Donalds, for 5 minutes.
Director Chopra, how you doing? Good to see you again.
Good to see you too, sir.
All right, cool, man. All right, it's been a long day. Hey, listen, from what I understand, the CFPB is considering significant changes to the Fair Credit Reporting Act, including broadening the scope of what constitutes a consumer reporting agency to basically any entity that compiles and makes available consumer financial information, whether or not it is used for eligibility decisions. The Bureau's authority is limited to regulations that are necessary and appropriate to carrying out the objectives of the Fair Credit Reporting Act. The Small Business Regulatory Enforcement Fairness Act includes a broad and novel definition of data broker, which seems to contradict decades of regulatory guidance, case law, and congressional intent. In your view, where is CFPB getting the authority under its limited rulemaking provisions to create this new definition of a data broker?
Well, I'm happy to share more information with you from the outline, but we have lots of data brokers assembling dossiers on all of us that are being used for sale for a whole set of purposes, including sale to state and non-state actors.
I understand
So
that,
we are
hold on.
trying to, go ahead.
But Director, where does CFPB get the additional authority to make a rule around this or to expand that definition? Because that's a congressional provision. That is not for an agency to make that determination.
Well, I mean, if it's a consumer reporting agency, and I shared this before, I think it's better for us to go through the process of explaining what are the indicia that would trigger these obligations. We can pursue it through an enforcement-only process, but we're studying the market to see how these consumer reporting agencies have evolved over time. We have lots of background screening companies, tenant screening companies, others. They all comply.
And I'm well aware.
That's what we're trying to use. We're only going to use the statute as Congress has written.
Well, I would say that sounds good, but looking at the history of agencies in Congress, what we are initially told we're only used for is always expanded at some point in the future. That is the concern of mine. I want to switch gears.
Well, then you should amend the statute then. I think if I
Now that is something that I think we probably would find agreement on, that
I
Congress
totally
should do its job
support-
and amend statutes as necessary.
totally support, and it's easier for the agencies when you all, on these privacy issues, emerging issues, we're very happy to work with you on them. It makes it easier.
I'm gonna reclaim my time.
Sorry.
The only thing I would say is that I think that if Congress actually takes its Article 1 power seriously, which I think we should go through and review a whole host of financial regulatory statutes to make sure that the credit raising and capital disbursement mechanisms of our economy are clear and not bogged down by red tape, which is unfortunately has occurred over many decades, far before you and before me, and we got to get that cleared up. One thing I want to come to real quickly, and this is dealing with data breaches. It appears that CFPB intends to include a strict liability standard with respect to data breaches or unauthorized accesses to credit report information by third parties. Do you think the compliance costs are overly burdensome on these institutions if essentially the institutions are going to have a strict liability standard tied to them? I mean, it's not
Yes.
like they're begging to get breached.
Yes,
companies.
so I think the question is often on unauthorized access. We have not proposed that. It is something that we're talking to the small entity representatives through the SABRIFA process
Yes.
about unauthorized, or how a set of data might be used or shared. There is sometimes an issue where they are sharing it, but then it says that it was unauthorized. So we're working through all of that before we propose it.
Okay, the one thing I would vehemently stress is we should not be assigning strict liability standards to any of these institutions. I mean, obviously, the regulatory burdens here in the United States of America are large enough as is. Applying strict liability over data breaches when it's clear that unless there is proof that the institutions actually invited the data breach on purpose, we should not be applying that level of liability to them. Nobody wants to see data breaches. I want to be clear on that. But we have to be careful and mindful of the fact that our institutions, our financial institutions, they don't want that either. Real quick before I get out, Section 1071 rule, compilation of data for minority women-owned businesses. Obviously, understanding that we want everybody to have full access to capital in our economy. Do you feel that the level of data being proposed in this rule is actually going to be more of a hindrance and a burden than it will actually, as opposed to opening up flows of capital in the United States?
I'm hopeful that based on how we incorporated the comments, we complied with the statutory requirement, and there's lots of use cases for it, but we're doing exactly what Congress asked us to do.
Well, I would argue what Congress asked for under Dodd-Frank was ridiculous, but that was another time. I hope to change that as well. Yield back, Chairman.
Thank you.
Gentleman yields back. I would like to thank Director Chopra for his testimony today. Without objection, all members will have 5 legislative days to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask Director Chopra to please respond no later than December 29th, 2023, and this hearing is adjourned.